can imagine a Wall Street where pay is cut in half. Can you imagine that? And bankers, traders, and executives are required to have their own skin in the game. Well, Bill Cohan calls it a good first step in ending moral rot on Wall Street. Bill spent 17 years on Wall Street, and he's the author of several books, including Money and Power and House of Cards. He's now Bloomberg TV contributing editor and columnist for Bloomberg View. Joins us this morning via Skype from Massachusetts. Thanks very much for speaking to us, Bill. So you have 3 solutions for ending what you describe as the moral rot on Wall Street. Just walk us through them.
Well, it's not going to make me the most popular guy on Wall Street on Monday morning, but I think in the long term, Maryam, it's going to ensure Wall Street's survival, which I guess is really what's most important. So number one is, as you described, having more skin in the game. Right now, since firms went from being private partnerships to public companies, all the risk is on the public shareholders and the public creditors of these companies. Let's get the principals at these Wall Street firms, the managing directors, the people who make the serious decisions about how to invest capital and who to hire and fire, the top 100 guys at these firms, let's get them to have their full net worths back in the game again, which will ensure that they are focused in time on task and not playing golf, not playing bridge, or whatever they were doing that got us into trouble in the last crisis. Number two is I really think we need to close the casino, Maryam. And what I mean by that is, effectively, Wall Street went from a business where you could underwrite stocks and bonds and raise capital for your clients to principal trading. And that's what these firms are all about basically now. And I think we need to think seriously about reestablishing what used to be called Glass-Steagall, the separation between trading and investment banking. And finally, I think we need to cut Wall Street compensation in half, Maryam. In half, yes, because in half is still way too much. And that will increase the bottom line for firms.
All right. Actually, Bill, I wanted to get your reaction to something else, and that's a piece by Warren Buffett in the New York Times talking about how Washington is essentially coddling the super rich. What do you make of that? How do you think it's going to go down on Wall Street?
Well, I mean, I think Warren Buffett, as usual, is he's a little late to the zeitgeist, but he's certainly correct. I mean, this is a feeling that has been brewing out there since this crisis started to emerge almost 4 years ago. And I think that, having Warren Buffett write this column and make this point is very important because it begins to, force the hand of people in Washington who take what he says very seriously. It is absolutely true. There is no doubt about the fact that what the policies of the last 3 years and 4 years have been all about restoring the status quo on Wall Street.
All right, thanks very much. Strong comments, strong opinions. Wouldn't expect anything less from Bill Cohan there, Bloomberg contributing editor and columnist.